Welcome to DeepTech315. Our first topic this week is the Nasdaq has been slipping down 5% since its high on July 10th. That was triggered by comments from former President Trump in his view that Taiwan should pay for part of their defense. And separately, President Biden and some increased trade restrictions related to companies like ASML and basically restricting China from some of these. But you have a market that's kind of nervous because it keeps going up, and then you have this, and it just kind of basically popped the bubble in the near term, down 5%. And as that was kind of unfolding, there was this sense that the AI trade is unwinding.
I think that the market is hyper skittish in the sense that everybody feels like we're in this AI bubble. We don't think we're in a bubble yet. We think it's a bull market that will go to a bubble. But I think that what we're seeing this past week is people just looking for a reason to sell in large part. These news items probably shouldn't be that much of a surprise. I mean, we've had stricter restrictions on semiconductors related to China for a while. We're going to continue to see that ramp. I doubt that this is the last time we're going to hear about more restrictions on that technology going to China. And I also think now that the market is repricing the reality of potentially Trump winning the election in November, starting to think about, okay, what might that mean for big tech? Because obviously they're the ones that have been affected the most. I think they've been the largest piece of this market pullback here.
Makes sense. And, that kind of nervousness in the market reminded me when I got into the tracking tech stocks back in the mid 90s, kind of the run from 94 to 99. And I think it's worth noting that during that whole period, before the dot-com bubble burst, there were a lot of times that the market pulled back. And in fact, we recently checked, there was 11 times that the Nasdaq pulled back by more than 10%. And so basically almost once every 2 years, the average pullback was 14%. The max was like 24%. So right now we're down 5%. I think this is the first time since the AI train got rolling back in January, we'll call it January of 23, since we've had any sort of kind of measurable pullback. But either way, it's like this is what happens, right? When you have bull markets, is that people get nervous and then they retreat and then they come back.
And I think pain is always magnified in markets. You go down a little bit and you experience some volatility, particularly after a period where we've been sort of spoiled and we've had relatively little volatility, since maybe the banking issues last February. You get spoiled, then you're down 5% and it feels like you're down 15. And I think to your point, we should expect, for as long as this AI bull market lasts, we should expect other pullbacks. We should expect other periods of doubt where we think that it's over. And I think there's still a lot more to go. One of the data point I would mention too, we talk about large cap tech. If you look at the forward PE multiples, there's a lot of opinions about how expensive tech is. Are they not expensive? Just to put it into some perspective, the group of the Mag 6 trades at about 30 times forward PE. If you look at the range for the past 10 years, that group has traded between 37 times and 20 times, basically. So yes, PEs are a little bit elevated relative to their 10-year averages, but we're not at the peaks that we've seen. We're not at sort of 2021 levels. Maybe we get there, maybe we don't. But I think it's helpful to remember, that these companies, they are some of the greatest companies in the world. They have a multiple that I think reflects that largely. It doesn't mean they can't keep working. And I think it certainly doesn't mean that they're going to stop investing in AI anytime soon.
Yeah, I come back. That's a great point, is that we're still early. And I come back to the fundamentals of AI, or the potential behind it, the near-term fundamentals. In the midst of this, we'll call it mini storm, we have TSM reports. They're even more in the midst given some of the Trump's comments, but their revenue growth for the June quarter was up 40%, 40. That compares to, I think it was 17% in the March quarter and flat in December. So, I mean, it's happening. They said that they're going to be basically won't be able to keep up with demand. They won't catch up to demand until calendar 26. So it feels like the fundamentals here continue to move forward. That's where our money's on. Let's jump to topic number 2, which is related to Netflix earnings. Call it um, the net sub ads, the advertising number. Initially, when the numbers came out, they had some little bit of punky guidance related to how to expect kind of contribution from this ad model. And shares initially traded off, call it 7%. As of this recording on Friday, the stock's down just about 1%, kind of more or less in line with the Nasdaq. So kind of a non-reaction to the quarter. The stock did kind of come back during their earnings call, if you want to call it that, and when they talked about their optimism regarding the advertising model longer term. But the piece that stood out to me was it took 28 minutes for a question to come up related to generative AI and how it's impacting their business. And I think it just spoke to something that we all know is like Netflix is not an AI company. We're excited about what's going on with AI. And but the context of the answer, management's response to how to think about generative AI was that they're going to make more content, better content, but not necessarily cheaper content. They also talked about the piece about better recommendations, things like that. But I want to focus on that piece, the content piece. And so better content with AI. Do you agree with that? And number 2 is at the same cost, or should we see some sort of a cost advantage related to using generative AI and building content?
We should get better content if AI is incorporated. And I think in the near term, what we'll see, like we're seeing in so many industries, it will be a mix of AI with humans. And so I think you could see AI being offloaded for certain tasks and maybe put AI in a writer's room, right? And it's this sort of synthetic third writer or fourth writer, however many there might be on the team, that's throwing in some ideas, that's bouncing off some creative intuition that maybe another writer might not have. And so I certainly think AI should enhance the content production
Just the storylines are going to get
pipeline.
better.
It should, yeah. I mean, I don't think it'll make them any worse because obviously, and we're seeing this again in most AI applications, if the AI is not useful, well, then the humans will just ignore it. So there's no downside to incorporating AI into many of these processes. In terms of it being more or less expensive, you'd have to think over the long run that it should be less expensive. And that's the point for all AI. If AI can't somehow reduce costs, then it has failed at its task. Now, that doesn't mean in the next 3-5 years, when we have this kind of team between humans and AI, that it might not reduce costs yet in the immediate term. But you have to think over the long run that it will, otherwise it would have failed.
Totally agree. I just was thinking back as you're talking about that third writer in the room and the creative side of this. And since we started Deepwater in 2017, we talked about 3 things that only humans can do. And that being empathetic, community building, being empathetic. It really, you need to hear it from someone as another heartbeat. As far as community, yes, you can build community through a social network, but real community has to be human to human. And we talk about creativity as something that's unique. And we'd refer to, like, you've never had like a hit song or a number 1 song be just completely generated by a machine. It has some sort of like a spark of an insight from a human. And I'm curious, is that creativity piece, just given what we've seen in AI over the last year and a half, is that something that the machine is going to be able to essentially, are we going to be talking 2 years from now, there's 2 things that humans can do that machines can't do?
We might be. And I would say, that thesis around creativity, community, and empathy that we came up with in 2018, it's 6 years old. And the one of those 3 that I've changed my mind the most on has been creativity, because you can see it. The more you use these tools, there is sometimes a kernel of creativity there. A lot of times I think that comes from the human and how we prompt them, how we use these tools. But that spark that I see sometimes does give me some belief that the machines might be able to have some of their own creativity develop over time. And it may be that they come up with things that humans never thought of before. I don't think the current models are really capable of that yet. But over time, I think we could see that. And I've talked about hallucinations before, here, and why they're actually a good thing, not a bad thing. A hallucination is a form of creativity. So I think that for all the things that we say negatively about hallucinations, you can't get rid of all of that creativity that ends up in hallucination from these models, because you do want them to be creative in the long run, but in a useful way.
Makes sense. Totally makes sense. My vote is that I think that it's you're still going to need some sort of spark. We're not going to have a hit song, a number one song, be entirely built by a machine, at least for the next 3 to 5 years. I'm going to reserve the right to change my mind, of course, as things progress. Last topic, you couldn't escape from this, especially if you were traveling. It was related to CrowdStrike and kind of the update that they gave, and it basically sent like the globe in a tailspin here. Shares of CrowdStrike down 11% on that. Initially, it was down almost like 14%, rallied back a little bit. Stock's still up almost 100%, 90-some percent year over year. And so even with this pullback, it's done magnificently well. But as we're kind of processing, this is kind of one of those things where you see it, my eyes kind of jump to the next headline and think they'll kind of sort this out in due time. But this really had a pretty big impact globally, and it's got to be having some brand damage to CrowdStrike.
I think it is damaging. I mean, anytime there's a security issue where an outage happens, right, for one of these types of companies, I think it does hurt the brand a little bit. I think that over the long run, I would suspect that CrowdStrike will probably be fine. I still think it's a high quality company. It's actually a company that we've owned before at Deepwater. It's a company that's in our Deepwater Frontier Tech Index right now. And so we still think it's a really great
No, we still own it.
player in that cybersecurity space, right, in our index. But I think the bigger picture is this. If you just think about, what's this means to kind of global security, I'll give you a glass half full take, which is after you have an incident, usually that's the safest time in the world, right? You think about this analogy that I always remember because it's hard to forget. After 9/11, the safest time ever to fly, probably in the history of flying, was right after those terrible attacks happened, because everybody has heightened awareness.
Right.
And I think when you have something like this happen, thankfully, this wasn't an actual attack. This was just an error in some of the code that they pushed and updated. But now you have to believe that that company in particular, and probably other security companies around the world, are on heightened alert for anything that might seem suspicious. So we might enjoy maybe a few months at least of even more secure cyber than we've had in the past.
I'll fill that half full glass up even a little fuller, is that this is just going to remind businesses about the importance of cybersecurity, and ultimately is that this kind of the protection that's needed ultimately came from inside of CrowdStrike. But I think that there is a case that this can be turned into a positive. My sense is that when they report their June quarter, there's probably going to be some hair around it related to this. And I don't know if it comes in the form of a charge or it comes in the form of their expectations that some of the renewal rates may come in at lower prices. Because if you're a business and you just lost $25 million in revenue and you go to that, go back to the negotiation table for your next 2 years, you're probably going to say, let's share some of the pain here. And so we're probably not out of the woods. It's probably not quite priced in the near term, but longer term, CrowdStrike's in a great place.
Agreed.
I'll give you final word on this topic.
I think we've talked at the beginning about some of the things around the globe, whether that be Taiwanese security, whether that be some of the engagements that the U.S. is in across the world, and obviously we may have an administration change later this year. I think all those things, you add them up, and you talk about the importance of cybersecurity. I would just reiterate that we are going into a world that has an ever increasing need for those kinds of services, and so that's something just like AI, I don't think is going away anytime soon.
Well said. On that, we'll catch up next week on DeepTech315 on behalf of Doug and I. Bye for now.